Hey, what's going on? We're going to talk about the housing market here because what in the world is going on, right? I'm getting a lot of people asking me about real estate, and they've been asking me for a while. I'm in the Seattle area, and this market's been really hot for pretty much 10 years. Let me get some coffee here. But there's a lot of signs that things are changing, and actually, I've been sounding the alarm for a little while, saying that, I think that we've reached a top. I was saying this months ago because over the last 2 years, I'll speak for Seattle. There's many other cities such as Nashville, Phoenix, Austin, Boise, Salt Lake City, Tampa Bay. There's a lot, Raleigh, North Carolina. There's a lot of cities that this applies to, but I'll just speak for Seattle here. For the past 10 years, the market's been basically going up since about 2012 at a pretty good pace. We have Amazon here, Microsoft here, Facebook's got a very growing presence, Google's got a very growing presence, so the median income's also gone up a lot, and the demand for housing has gone up a lot. Everyone wants to own their own home, But the last 2 years, national average, housing went up, appreciated almost over 20% a year. In the Seattle area here, I think over the last 2 years, houses went up about 42, 43%. And some markets in the country went up as high as 79% over the last 2 years. Now, on average, houses go up 3 to 5% a year. And that is the median, that is the mean. And when you get too high above that or too far below that, a correction happens. It has to happen because it's way not just unsustainable, but it needs to be corrected because then it just destroys the market. If things go up too fast or down too low, then it destroys the market for one side of the equation. If it goes up too high too fast, people can't buy anymore. So it has to come down to find that kind of, I don't want to say equilibrium, but at least a point where business can happen. If it gets too low, then sellers won't sell or can't sell, and so no business happens that way either. So it always comes back to the middle. So I really want to point to this REDFIN report here. By the way, if you're new to the channel, hit that like button. Even if you've been here before, hit the like button. But if you're new, definitely hit that subscribe button. I'm going to keep bringing you this information. But let's dive into this. Housing market update. This is from REDFIN. REDFIN is a wonderful resource for real estate information. Housing market update. Home buying demand dips further as rates approach 6%. Now, this is published on June 23rd, so this is about a week ago from the time of me recording this. It's very relevant. So interest rates actually went up a little over 6%, but now they've come down a little bit. I think the average for really good credit is about 5.85, something like that. But I have some very important things to look at here, and bear with me. It's going to be very valuable for you if you've been thinking about buying a home or you've been thinking about selling a home or deciding what to do. And to sum this, to give one other thing, there's one thing that I actually have a lot of clients of mine, a lot of people looking to buy homes, what we've been recommending that they do. And we've been telling them to actually not buy a home. We'll get into this in a minute as to why. But instead what we've been having them do is something called a rent to own. Because there's a company we work with that here's what they do. You pick out a home that you want to buy. They will buy it and you rent it. And you decide later if you want to buy it. And the price is already locked in. You already know what the price is going to be. And you just pay rent. There's no obligation, no penalty for not buying. You don't have to buy the home, but you can buy the home whenever you want. So it's a good way for people to get into the house that they want, but not have that liability of, oh my God, is the price going to go down? Maybe interest rates will go down and where are the deals going to get? Because everyone wants to buy the bottom of the market, And things are looking like they are cooling off. So let's dive into this data. I'll have a link in the description if you want to reach out to us about that. We're in the Seattle area, but we can really help anyone anywhere in the country. So largest year-over-year declines in over 2 years. So they're referring back to the very beginning of the pandemic, right? That was when it was the lowest, but it's the largest year-over-year decline in over 2 years. So which that doesn't sound crazy, but when you look at the last 2 years we've had, that's really saying something. Home buying demand pulled back further as mortgage rates reached their highest level in 13 years. Now that is pretty significant. Mortgage rates at their highest level in 13 years. So we're talking since the great financial crisis, since the housing bubble burst because of all the subprime stuff. Mortgage rates near 6% have put a big chill on demand for homes, said Redfin chief economist Daryl Fairweather. Man speaks the truth, right? With home prices still at record highs, the affordability crisis has been dialed up to an 11 out of 10. Home sellers are aware of this as well, a record share of dropping their asking price. That's another thing that we're going to talk about. We're actually starting to see price drops. So that is when someone lists a house for a certain price and then they lower the price. Even though there are fewer home sales, prices have not declined any significant amount yet. But if the housing market continues to cool, prices could fall in 2023. I would argue that they are going to be falling, and they will continue falling through 2023 is my assessment. Many home sellers have stuck it in their head that homes are selling a certain amount above asking, or that they can underprice their home to try to generate a bidding war, but that strategy isn't working anymore, said Boston REDFIN real estate agent Robin Spangenberg. Right? So we're talking about industry people, that it's actually not on the surface level, it's not in their best interest to be saying these things that they're saying, because they're saying, yeah, the housing market is kind of going down, and they're in the housing business, so it's not good for their business, but they're still saying this, right? So, and that's the truth, especially over the past couple of years, past 10 years really, but the last couple of years, what's been going on in the housing market is extremely unusual in favor of the seller side. Very, very much on the seller side, very much a seller market. So how many sellers still have it stuck in their head, and I've seen this too, that they're so used to the bidding wars and they're used to this tactic of underpricing to get a crap load of people in there and create a bidding war. Well, bidding wars aren't really happening much anymore. Sure, they are still happening in some little pockets within some cities, but overall that is not working anymore. I can say that from experience of what I've been seeing. For the week ending June 23rd, 30-year mortgage rates rose to 5.81%, the highest level since November 2008. Wow. Fewer people searched for home sales on Google. That's a big indicator. Searches during the week ending June 18 were down 14% from a year earlier. So that's actually a pretty significant number. I expect to see that rise. But nonetheless, I think people are still showing interest. They want to buy homes. They're just waiting to see, they're realizing maybe now's not the perfect time. So that's again why we're kind of moving into this rent to own section, because it doesn't give any obligation or liability to the home buyer, but it still gives them a lot of flexibility, and they get to actually lock up a house and decide to buy it later if they want with no penalty. The seasonally adjusted Redfin Home Buyer Demand Index, a measure of requests for home tours and other home buying services from Redfin agents, was down 16% year over year during the week ending June 19th. This was the largest decline since April 2020, which is when the real estate market basically shut off, because that's when everything went on lockdown. Now, this one is actually really indicative to me, because Google searches is one thing, but people deciding to take action and schedule tours and go see homes, that being down, that is very significant, because anyone will sit at home, whether you're all kinds of on the spectrum of buying a home or how serious or not you are about buying a home. People can search for homes for sale in their area. Like, that happens all the time. But that's like the early phases of people deciding to maybe buy a home or do something. But when people go schedule tours and take that kind of action, they're more serious. So that's down even more, 16% year over year. Very important to keep in mind. I'd call that a key indicator. Touring activity as of June 19th was 6% below the start of the year, compared to a 24% increase at this time last year, according to home tour technology company ShowingTime. ShowingTime is a company where you can schedule online tours. It's really ramped up in the past couple of years. Not online tours. You can do online tours, but that's where you schedule a lot of your tours and to go see houses and stuff like that. So 6% below the start of the year, compared to a 24% increase at this time last year. Wow. Mortgage purchase applications were down 10% from a year earlier, while the seasonally adjusted index was up 8% week over week during the week ending June 17th. Seasonally adjusted index was up 8%. So if you are hopeful that the housing market is at least staying where it is or going up, I mean, that's a little breadcrumb for you, I guess, but a lot of this is just showing, right? We have mortgage applications down. We have people significantly down. We have way less people going to see houses. Even the searches for homes are down. Mortgage rates are high. Houses are, well, we'll get into some other stuff. This is some other stuff to pay attention to. The median home sale price was up 14% year over year to a record almost $400,000. And that's across the nation. So, like, well, wait a minute. If home prices are up year over year, like, how are we seeing a decline year over year? So that means like June of 2021, home prices are up higher now than they were in June 2021. So that's year over year. Do you get what I'm saying there? That's not like from the beginning of this year or from last month to this month, which is a much more, I would say, valuable assessment as opposed to year over year. Median asking price of newly listed homes increased 16%. So that tells us that the market from June 2021 till now is up, but that doesn't mean it's going to keep going up or it's even been going up this year, because it kept going up quite a bit for the rest of 2021 and even at the very beginning of this year. And now we're coming down from that. So keep that in mind. The monthly mortgage payment on the median asking price home increased to $2,500 at the current 5.81% mortgage rate. This is up 48% from $1,693 a year earlier when mortgage rates were 3%. So what they're saying is that, say you were going to go buy a house and you were going to pay $1,693 last year, that same house at that same price, now you're paying $2,500. Do you think that's going to have an effect on the housing market, on the buyer demand? Absolutely, right? How much is that? Up 48%. You're paying almost 50% more for the same house at the same price on a per month, mortgage payment basis. That's one of the biggest things I look at, and that's why I've been sounding the alarm for months. Because when these interest rates started going up, I go, oh, monthly payments are going to be a lot higher for the same house at the same price. That's going to lower demand. That is what raising interest rates is meant to do. It's meant to lower demand, not just in housing, but in everything. Pending home sales were down 10% year over year, the largest decline since May 2020, which again was at the beginning of the pandemic where real estate basically got shut off. But it's only a 2-year thing. But 10% year over year, especially at this point of the year, the busiest buying time, busiest real estate time of the year right now. And we'll get into it, but there's still actually less houses listed for sale right now than there were this time last year. And the pending home sales are still down. Crazy. New listings of homes for sale were down 2% from a year earlier. See what I'm saying? New listings, they're down 2% less than this time last year, but home sales are down 10%. Wow. Active listings, the number of homes listed for sale at any point during the period, fell 5% year over year, the smallest decline since December 2019. 48% of homes that went under contract had an accepted offer within the first 2 weeks on the market, down 50% a year earlier. So they're saying that less than half of the homes that get put up for sale have an accepted offer within the first 2 weeks. That's down 50%. Because more like 90+% of homes were having an accepted offer within the first week, 1 week, of their house being listed for sale. Now we're saying less than half the homes are getting an offer in the first 2 weeks. Because if your home doesn't sell in the first 2 weeks, you got to lower the price. Straight up. Because the market has spoken. If your house doesn't sell quickly, it's overpriced. I'm in real estate, I'm telling you, that's what it is. And think about it. And one of the biggest things we look at for someone that does want to buy a home, when we're working with buyers, we are looking for houses that have been on the market for at least 2 weeks, because we know those people are ready to make a deal, right? You can make a lower priced offer. They may have even done a price cut by that point, but we know we can come in and make a lower offer. And because those 2 weeks might as well feel like 2 months. Right? When you're trying to sell a house and you don't have the offer you expected in 2 weeks, like each time moves very slowly. And so the motivation, the longer that house is on the market, the motivation for home sellers goes up big time. So when we come in with home buyers, we chop it down, because it's turning into more of a buyer's market. With that said, I don't necessarily think right now is the best time to buy. That's why we're more really bringing up that rent to own option, because it still allows you to get in the house you want and you get to lock it up, but you don't have the obligation of this interest rate or this price, right? The only obligation you have is to pay rent, a 1 year lease at a time, and you get up to 5 years to buy the home. It's a fantastic program. Anyways, 34% of homes that went under contract had an accepted offer within 1 week of hitting the market, down from 36% a year earlier. Okay. So that's a little bit of a drop. Homes that sold were on the market for a median of 17 days, down from 18 days a year earlier, and up slightly from the record low of 15 days set in May and early June. Right, so we were at 15 days. So, okay. 55% of homes sold above list price, up from 53% a year earlier. On average, 6.1% of homes for sale each week had a price drop, a record high as far back as the data goes through the beginning of 2015. On average, 6.1% of homes for sale each week had a price drop. Record high, going back to 2015. Says something. The average sale to list price ratio, which measures how close homes are selling to their asking price, declined slightly to 102.4%. In other words, the average home sold for 2.4% above its asking price. This was up from 102.1% a year earlier. You're starting to see some conflicting data, and that's why some people are undecided yet. But to me, it's overwhelming that it is cooling, that it is coming down. Some of these numbers here actually make me scratch my head, right? But this is looking at year over year. Some of it's year over year, some of it's month to month. I'm more inclined to look at the month to month stuff, especially for the season that we're in. Median sale price up 14% year over year. So here was 20, 21, 22. So we're up at this point. Median asking price up 16% year over year. Quite a move at the beginning of the year, and it's lined out because interest rates have gone up, so that's where we are. And I think where we are, certainly, I think the peak was back here in about March, frankly. I know it looks like it's gone up the median, but to me, March, April was the peak, was the peak, because that's when interest rates started going up. Home buyer mortgage payments up 47.6% year over year. How long? How long do you think people are going to pay that much more, right? $2,500 as opposed to this time last year, $1,680. I mean, it can't go any higher. People will not pay more for the same house. It's over. It's done. They will not tolerate paying any more. So now it's a matter of buyers and sellers. What are they going to do? And I think, plus, we're not even getting into this, but foreclosures are on the rise. That backlog from the pandemic, etc. And there's just all these people that didn't pay. Evictions are on the rise. And home builders. Oh my God, home builders. There are so many home builder, like new builds, that are just, oh my God, all of this is mounting up into a supply demand. More supply than demand is where we're going. Supply is raising, demand is dropping. And it's just a matter of time before, the question is, how different does it get? Where does it stop and start coming back? I think we got a ways to go in terms of demand going down and supply going up. Pending sales down 9.7% year over year. Big deal. That's a big deal. Pending sales down 9.7%. So now we're starting to see some cracking, right? You can see, but look at those ones. They start going down around this time. Yes. But look at that, right? 21, or where are we? That was 21. This is 20, and then 21 was even more, and then about 22 is now down. So that's interesting, right? We would expect 21 to be more than 20, but we would expect 22 to be more than 21 also if what has been going on were to continue. So that's a crack in the foundation there to me. New listings of homes down 2.2% year over year. It's an interesting one. That's an interesting one. But it's about the same in terms of new listings. Active listings of homes for sale down 4.7%. So we've had less homes up for sale. So this rolls into the supply. 48% of pending sales under contract within 2 weeks. So we have dipped from last year. We are down, and you can see it going down. Granted, you see 21 going down too. 22 is obviously going down faster, but not, the question is how much faster does this accelerate? Because obviously 21 went down, 20 and 20 went down, but where's 21, where's 22 going to go? Where's 22 going to go? I think it's going to go down. 34% of pending sales under contract within 1 week. So again, that's down too. We read about that number earlier. Homes sold in a median of 17 days. So you can see that we are down here too. But this is interesting. 20, 21, 22. Interesting. but this one's starting to kind of curve up. Keep an eye on that one. 55% of homes sold above list price. Again, this is nationally. There are certainly markets that are nowhere near this good, don't have any of these positive statistics. Seattle's is, I'd say, below the average for what's going on here. Boise, Phoenix, Austin, Nashville, Tampa Bay, Salt Lake, some California areas, Raleigh, North Carolina. Like, there's certain, the Midwest is actually doing really good. The Midwest is actually doing really good. But the Sun Belt and up here in the Pacific Northwest, Seattle, Boise, Salt Lake, and Ogden, Utah. Maybe I got that city wrong. But those areas are certainly getting affected more than others. So it's also dependent on where you're at so far. And I think, of course, not everything's going to be equal. So there will be differences from city to city. 6% of listings had price drops. That's interesting. Now, this is interesting, right? Because almost price drops here were, even last year, at the highest, just a little over 4%. We're over 6%. So really, that's a 50% increase in price drops. So that tells you bidding wars are certainly slowing down. More price drops than any time since at least 2015. Right, here was the highest in 2015. Actually, that was 2019. What are you talking about here? Oh, since. Why do they say it like this? Because it looks like the highest time was October 2019. Anyways, we're up here at 6.1. So will it come down? I don't know. I actually expect this to. Now, this isn't a pure indicator because it could come down, but that would just mean, that could also mean that listing prices have come down. Do you get what I'm saying? Just because price drops just shows a discrepancy between sellers and buyers in the market. So how much longer will that discrepancy last? This can come down, but that doesn't mean price houses go up, or stay where they are. That just means people, and I think ultimately we will see that come down because we will see listing prices come down, and they won't have to do as many price drops because they will be more aware of what the actual market is paying instead of what they're pie in the sky hoping. Average home sold for 102.4%. So that's still up. That's an interesting one. But that's nationwide. That's not market to market. REDFIN home buyer demand. And REDFIN just did some layoffs. And I think they're going to do some more layoffs too. So Zillow. So that's interesting, right? Something to pay attention to. That's a pretty steep drop. And you can see it's right when those interest rates started going up. Home buyer demand down 16%. That's a lot. That is a hell of a lot. And this thing, I don't see it slowing down. And that is the end of the data. I hope you found that useful. Again, if you're looking to buy a home, I wouldn't right now. I would do rent to own is what I would do. Because if you're in the Seattle area, we can help you with that. If you're in a different market, reach out and we can find someone in your area to help you. Link in description. But I'm really liking this rent to own option because you can get in the home you want to own, but you don't have the obligation or liability of the mortgage. And the purchase price is already locked in, right? So if I'm wrong and the market goes up, you're getting a deal. If the market goes down, well, you don't have to buy the home and you can just move out after the 1-year lease. Simple as that. Because I think this whole, what if I miss out? What if I miss the bottom in the next year? Housing doesn't work like that. It's a much more slow moving market in terms of adjustments. It's not like the stock market or something. I expect these declines to last because of the interest rates. The interest rates are just, I don't see the interest rates coming down anytime soon. They can't. The Fed, they cannot, they have, their main priority is inflation. And house prices being up is part of inflation. Gas prices being up is part of inflation. Stock prices, crypto prices being up, that's part of inflation. But inflation is just like stuff in the store costs more. No. It's everything. Everything costs more in inflation. So their main goal is to bring down inflation. Housing is a slower moving market, like I said. So it's going to come down to, they know it's going to come down. They don't care. They need it to come down to preserve their dollar. Get what I'm saying? So I don't think now is a great time to buy, but I do think it's a good time to get into a house and have that flexibility, like through a rent-to-own program, because there's just no downside to it. There's not, because say the market goes up, Okay, well, you locked in a price. Even if it goes up above that price, you get to buy it at that price and you get a deal. If it goes down, yeah, you don't have to buy the house. You can go look around the market and wait for stuff to come down. So that's what I got for you. Hit that subscribe button. I really, really appreciate it. It really helps support the channel. Definitely hit that like button. Let's get this information out to more people, and it really helps support the channel also. Stay safe out there. You're awesome. I'll be bringing you more updates.